A sudden surge in whale activity is turning heads across the crypto market, and this time the spotlight is on Uniswap. What makes this development especially interesting is that it arrived just as a major institutional forecast suggested UNI could eventually reach $100 before the end of the decade. That prediction has sparked intense discussion among traders, analysts, and long-term investors. But the real story goes beyond a price target. Behind the scenes, on-chain data is showing activity levels not seen in months, and those signals could reveal how large investors are positioning themselves for what they believe could be the next major phase of blockchain adoption. Stay with us because the connection between tokenized assets, decentralized finance, and the broader crypto market may be far bigger than many people realize. The latest data comes from Santiment, which reported that whale transactions on the Uniswap network have climbed to their highest level in 7 months. At the same time, active whale addresses reached a 4-month peak, indicating that large holders have become significantly more active. In crypto markets, whale activity is closely monitored because these participants often control substantial amounts of capital and can influence liquidity, sentiment, and market direction. While whale movements do not guarantee future price action, they frequently attract attention because they can signal growing confidence, increased positioning, or preparation for larger market developments. The timing of this spike is particularly noteworthy because it occurred shortly after a major forecast from Standard Chartered's research team entered the conversation and quickly spread throughout financial media and crypto communities. According to Standard Chartered researcher Jeff Kendrick and his team, the long-term outlook for UNI is closely tied to the growth of tokenized assets moving onto blockchain networks. Their projections suggest that tokenized assets could expand from approximately $340 billion today to around $4 trillion by the end of 2028. For viewers who may be unfamiliar with tokenization, this refers to bringing real-world assets onto blockchain networks in digital form. These assets can include stocks, funds, bonds, and other financial instruments. The idea is that blockchain technology can make trading, settlement, and ownership transfers more efficient. If that transformation accelerates as expected, decentralized finance platforms could become major gateways for accessing and trading these assets, creating significant opportunities for infrastructure providers like Uniswap. The research team went even further by estimating that tokenized assets active within decentralized finance ecosystems could multiply at least 37 times over the next 4 years. That is an enormous projection, and one that helps explain why institutional analysts are paying closer attention to DeFi platforms. Their argument is straightforward. If tokenized assets continue expanding at that pace, liquidity pools across leading decentralized exchanges could experience substantial growth. Uniswap, as the largest decentralized exchange in the market, is viewed as a potential beneficiary of that trend. Its long operating history, strong brand recognition, and established role within decentralized trading infrastructure place it in a position where increased blockchain-based financial activity could translate into greater usage across its ecosystem. One reason analysts remain optimistic about Uniswap is its dominance in trading highly correlated asset pairs. In simple terms, it has become one of the primary destinations for decentralized trading activity across numerous blockchain-based assets. Over the years, Uniswap has maintained a strong presence despite market cycles, regulatory discussions, and intense competition. That resilience has helped establish credibility within the broader crypto sector. Analysts argue that longevity matters because institutional participants often favor platforms with proven track records. As traditional finance explores blockchain integration, infrastructure providers with existing liquidity, user activity, and technical maturity may have advantages over newer competitors. This perspective forms a major part of the long-term thesis supporting projections for future growth across the Uniswap ecosystem. Adding further momentum to the narrative, Uniswap recently confirmed that tokenized equities including Apple, Tesla, and NVIDIA are now accessible through its application and API services. This is a significant development because it demonstrates how blockchain platforms are increasingly intersecting with traditional financial markets. Instead of existing as separate worlds, decentralized finance and conventional investing are gradually finding points of connection. Earlier this year, Uniswap also enabled trading access for BlackRock's BUIDL tokenized fund through Uniswap X. That announcement generated considerable attention and reportedly contributed to a 40% increase in UNI's token value. These developments provide practical examples of tokenization moving beyond theory and into real-world implementation, which is exactly the trend institutional forecasts are attempting to measure. Standard Chartered's price projections attracted even more attention because they laid out a specific roadmap for UNI's potential future value. The forecast expects UNI to reach $6.50 by the end of this year, rise to $20 by 2027, and then climb to $40 by the end of 2028. From there, the researchers see the token potentially reaching $65 during 2029, before ultimately targeting $100 by the end of 2030. At the time the forecast was published, that represented roughly a 40-fold increase from UNI's trading level. The bank also suggested that UNI could outperform both Bitcoin and Ethereum across that extended period. Whether those projections ultimately materialize remains uncertain, but they undeniably captured the market's attention. The market reaction was swift. On June 17th, Santiment highlighted that Uniswap had surprised traders with a 24% price surge, accompanied by significant increases in whale activity and trading volume. Then, just one day later, the analytics platform reported another notable milestone. Active addresses had climbed to a 4-month high, while whale transactions reached levels not seen in 7 months. These metrics matter because they provide insight into actual network participation rather than relying solely on price movement. When address activity and large transactions rise together, analysts often interpret that combination as a sign of growing engagement across the ecosystem. It does not guarantee sustained momentum, but it can indicate that market participants are paying much closer attention than before. Looking at current price action, UNI was trading near $3.10 at the time of reporting, although it briefly reached approximately $3.65 during the previous 24 hours. According to CoinGecko data, that marked its highest level since mid-May. The token has gained nearly 24% over the past week and more than 16% over the last 14 days. However, the longer-term picture remains mixed. UNI is still down almost 12% over the past month and remains approximately 58% lower than its level 1 year ago. These figures remind investors that despite recent strength, the asset is still recovering from significant declines experienced during broader market weakness. Now, if you're an XRP holder, you might be asking why a story about Uniswap matters to your portfolio. Here's the connection. The larger theme driving this discussion is tokenization, and tokenization is becoming one of the most important narratives across the entire blockchain industry. Whether the conversation centers on decentralized exchanges, institutional adoption, tokenized funds, or digital representations of traditional assets, the underlying trend is the same. Major financial institutions are increasingly exploring how blockchain networks can support future financial infrastructure. Ripple and XRP have frequently been part of conversations surrounding cross-border payments, liquidity solutions, and institutional blockchain adoption. As tokenized markets expand, investor attention often extends beyond a single project and toward the broader ecosystem supporting blockchain-based finance. What we are witnessing today may be an early example of how institutional forecasts, on-chain data, and real-world blockchain adoption can intersect to create powerful market narratives. Uniswap's whale activity reaching a 7-month high, active addresses hitting a 4-month peak, and growing interest in tokenized assets all point to a sector that continues evolving despite market volatility. The coming years will reveal whether projections of $4 trillion in tokenized assets become reality, but the direction of travel is attracting increasing attention from both traditional finance and crypto-native investors. As always, we'll continue tracking every major development affecting XRP, Ripple, blockchain innovation, and the wider digital asset market. If you found this update valuable, be sure to subscribe to XRP Economic Radar, like this video, share it with fellow crypto enthusiasts, and let us know your thoughts in the comments. Do you believe tokenized assets could become the next major catalyst for crypto adoption? And could UNI really reach $100 by 2030? We look forward to hearing your perspective and continuing the conversation with our growing community.